Welcome back everyone, it is so great to see you all back here, hope you're all well. And now here's the thing, Bitcoin spent the entire month of June getting destroyed, down 20%, hit $57,735, that's a 21-month low. And Robinhood, the stock that's supposed to move with crypto, it ripped 34% higher in the same time frame. From $84 to $112.73, this is not a correlation, this is decoupling. And today we're gonna read exactly what the charts are telling us about whether this trade still has room or if the rubber band is about to snap back very hard. And now let's start with Bitcoin daily chart because that's where the story begins. Bitcoin closed today at $63,221. Reading the indicator system from left to the right, long-term trend sits at 70,500, mid-term 67,578, short-term $63,090. Price is hugging the short-term line from below. That's not a recovery, that's barely clinching to support. The upper resistance all the way up at $80,096, support floor $61,990, so Bitcoin is trading in the bottom about 20% of its visible range, 57,735 low to 82,833 high. We are looking at a chart that got wrecked in June and is now trying to find a floor. Now let's flip over to the hood. Completely different picture. Close at $112.73, indicator system, long-term trend 90.24, midterm 88.21, short-term 101.20, upper rail 94.86, lower rail 70.06. Notice something? Price is above every single line, all 5 of them. The upper resistance that should be capping this thing, we are $17.87 above it. The yellow label test resistor visible range high is 120.05, low 63.52. Current price sits at roughly 94% of that range. We are picking pennies in front of a steamroller territory. So why is Hood ripping while BTC bleeds? 3 things. The first, earnings coming July 29th due to results. Revenue up 41.5% year over year to $4.6 billion. Net income at $1.9 billion. This isn't a meme stock running on tweets anymore. This is a business that's actually printing money over money. Second, Robinhood just closed at $2.2 billion convertible notes offering late June. When a company raises that kind of capital near all-time highs, it signals one thing: management sees room to grow into that valuation. And the third, and here's the ironic part, crypto trading volume actually spikes during volatile markets. The June BTC crash that probably drove more transactions through Robinhood's crypto desk, not feel. So let me be straight with you on the trade. If you've been riding this since our original call back on June 28, entries in $96 to $97, stop at 90. Target 110 to 115, congratulations. So now you're sitting on a roughly 16% gain in 7 trading days. Target $110 got blown past. Intraday print hit 120.05 on July 2nd. But here's what I do right now. Not add, not chase. This thing is stretched like a rubber band. The short-term trend line is at 101.20 and we're trading at 112.73. That's an 11.4% extension above the shortest trend line. On a stock with a PE of 44 and Analyst targets averaging 105, which is below where we are trading right now. So now, for anyone flat, don't FOMO in here. The playbook I would use: either wait for a pullback to the $100 or $103 zone where the short-term trend lives, or wait for the July 29th earnings catalyst to penetrate the reaction. A miss on earnings with this valuation, fast move lower. A beat, maybe another leg, but you're paying 55 times earnings for that hope. Risk reward at current levels favors patience over position. Stop if you're still long. I would trail it tight. $105 area. Lock in the bulk of these gains. The $90 stop from our original call, ancient history. We are playing with house money now. Protect it. So listen to me again. Please protect it. Hood broke its correlation to BTC, and that's genuinely impressive. But decoupling works both ways. When the market decides to reconnect those dots, you don't want to be holding the bag at $112. When gravity remembers, it exists.